This presentation presents the BCGE Group's results for the first half of 2021, as well as its priorities and the outlook for the year as a whole. The excellent economic performance of the first half shows the good adaptability of the business model in a climate of recovery in the Swiss and international economies. The bank is today applying a strategic model that allows it to quickly capture the renewed potential of the economy. Net profit reached a record level of 64 million Swiss francs, and the group's prospects are well oriented for the end of the year. All performance indicators are up. The bank's competitiveness remains excellent, as reflected in mortgages and assets under management and administration. Productivity is comparable to that of the best Swiss universal banks with international activities. Expenses are under control and the cost of risk is low. Profitability, which is expressed by the operating results of the equity capital, is at a very good level. Lastly, the equity capitalization ratio is at an optimal level. Turnover continues its strong growth trend. Operating expenses reflect the trend of investment in digitalization and commercial development. The bank recorded a significant increase in revenues in the first half of 2021, which puts it above the 200 million Swiss francs mark. All business lines contributed to this encouraging performance. Interest income was the main source of revenue, totaling 104 million Swiss francs and 126 million Swiss francs if we take into account the early regulatory provisions for sound loans. Commissions also reached a very high level, driven by asset management and international trade finance. Lastly, trading operations boosted by foreign exchange activity totaled 17 million Swiss francs. True to its mission, BCGE is a major contributor to financing Geneva's economy. It grants loans to companies and individuals for over 18 billion Swiss francs. 255 new companies placed their trust in the bank in the first half of 2021. Mortgages also continue to grow. At 44% of the balance sheet total, their share of the bank's activities attests to its disciplined diversification. The significant growth of more than 650 million Swiss francs in client deposits bears witness to the confidence clients have in BCGE. These deposits constitute a considerable source of refinancing for the bank and contribute to its financial strength. In particular, they give it a high mortgage cover ratio of 142%. This growth is clear proof of the bank's ability to attract deposits, as well as of the success of the Avantage Service loyalty program, which has a community of over 37,000 members. The gross interest margin rose significantly by more than 4 million Swiss francs to 126 million Swiss francs over the first half of the year, a new record for the bank. This increase was achieved despite the negative interest rate environment, thanks to the growth in the volume of commercial business and an adapted ALM strategy. Commissions are growing across all business lines. Commissions on securities are boosted by the success of management mandates and investment funds. Loan commissions reflect the vitality of international trade. Lastly, other commissions increased by more than 2%, reflecting the growth of the retail banking business in branches and online. It should be noted that the 32% share of commissions in turnover is high and reflects the diversity of the bank's activities. The increase in assets under management and administration is encouraging and once again confirms that the bank is extremely competitive. The half-yearly increase of 8.9% enabled BCGE to cross the significant threshold of 33 billion Swiss francs. Management mandates are up with 1,053 new mandates, and investment funds reached 3.7 billion Swiss francs. Also noteworthy is the success of the 1816 online trading platform, which passed the 10,000 investor milestone. Operating expenses reflect the group's growth, particularly in terms of digital innovations and cyber risk prevention solutions. The bank is also undertaking the energy transition of its buildings and investing in human resources, especially in cutting-edge areas. As a result, the group's workforce has grown to 824 full-time equivalent employees. The bank is once again increasing its equity capital to strengthen its solidity and ensure its growth. Almost 1 billion Swiss francs of additional equity capital has been created since 2005, bringing the total to 1.7 billion Swiss francs. With a coverage ratio of around 16%, BCGE belongs to the group of well-capitalized and solid banks. The number of shareholders of the bank is increasing year on year. 340 new shareholders joined the bank in the first half of the year. This ever wider distribution of the floating share of capital is encouraging. The high level of employee participation in the bank's capital is also noteworthy. The BCGE share rose steadily for the first 6 months of the year. Its potential for growth remains high, since the intrinsic value of the share is 246 Swiss francs, whereas the share price was trading at 172 Swiss francs on the 30th of June 2021. On the left of the screen are the challenges that were outlined during the presentation of the annual results on the 23rd of February 2021. On the right, the achievements at the end of the first half year. Mission accomplished in terms of supporting the regional economy with outstanding loans of 18 billion Swiss francs and proactive support for businesses of all types. We are targeting mortgage growth with low risk. Assets under management total more than 17 billion Swiss francs. In terms of asset management, the Synchrony investment funds reached 3.7 billion Swiss francs. The share of the group's turnover in euros and US dollars reflects the group's focus on the international orientation of Geneva's business. Lastly, the bank is maintaining the pace of its digital transition and continuing to assist clients in the energy transition process. The bank considers that its strategic objectives have been met for the first half of 2021. The bank has 7 strategic priorities for the second half of the year. To act as the leading partner of Geneva's economy in the face of economic constraints and to support its increasingly outward-looking growth and international markets. To promote quality and encourage clients to be cautious on the mortgage market. To build on the bank's success in the field of private banking, thanks to a focused and high-performance investment philosophy. To develop certain niches in the asset management market. To be a major contributor to the influence of Geneva's economy and trade. To innovate in the digitalization of banking. To accompany clients in the energy transition process. The bank is stepping up the pace of business expansion, backed by the recovery of the Swiss and international economies. Its current impetus is based on the diversity of its skills and on the suitability of its business model to the demands of its clients. It has 5 major orientations in 2021. A favorable strategic position. Financial soundness, the attention given to the evolution of interest rates and markets, targeted and measured lending policy, the development of businesses that are less capital intensive. Barring a deterioration in the economic situation and taking into account the very positive commercial developments, the bank expects an increase in overall earnings for the year, allowing for growth in equity capital and the dividend.